Coming up on Market to Market, crude oil prices approach a 52-week high, giving motorists some major pain at the pump. USDA Secretaries, both past and present, discuss the future of American agriculture. And in the wake of glyphosate-resistant plants, soldiers press on in the war on weeds. Those stories and market analysis with Mark Gold next.
Funding for Market to Market is provided by Pioneer Hybrid, which supports efforts to help families pass their farms into the hands of the next generation. Pioneer, science with service, delivering success.
This is the Friday, February 24 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Mark Pearson. An exasperated President Harry S. Truman once cried, "Give me a one-handed economist." All my economists say, on the one hand and on the other. In the years since Truman, things have gotten a bit more complicated as America competes in a complex global economy. This week, 11 presidents later, there weren't enough hands to count all the seemingly conflicting data. On the one hand, the Dow Jones Industrials and the S&P 500 both traded this week at their highest level since 2008. On the other hand, oil prices rose 6% in the past week alone and are up more than 10% since the beginning of February. On yet another appendage, let's say a foot, the National Association of Realtors reports sales of previously owned homes rose in January to their highest level since May of 2010. But on the other foot, retail gasoline prices tallied their 17th consecutive day of increases Friday as the national average for a gallon of unleaded soared to $3.65, a record for this time of year. Lest we need more appendages to adequately judge economic vitality, we'll stop at 4. But other factors like the debt debacle in Europe, domestic deficits, and stubbornly high unemployment all pose threats to economic expansion. The rural economy is not without challenges of its own, of course, but inside the Beltway this week, USDA's chief economist offered a cautiously optimistic outlook for American agriculture.
Madam Secretary.
Looking back at a healthy farm economy in 2011, USDA's top number cruncher set a positive tone during the government agency's annual Agriculture Outlook Forum.
We saw record prices for many commodities, record agricultural exports, and record farm income. Not surprising, record prices have prompted record production worldwide. And as we saw over the last half of 2011, prices for many of the commodities have come down, again reflecting strong production levels.
Glauber expects record figures for crop prices and net farm income to dip in 2012. According to USDA's chief economist, a lower dollar will keep overall U.S. exports competitive, but he predicted farm exports will drop slightly in the coming year. Despite China's booming economy and its newly minted status as the #1 destination for U.S. farm exports, Glauber expects shipments to the Asian power will decline by 15% in 2012.
Nonetheless, China still remains a very, very important engine for these commodity markets, importing something like 60% of the soybeans traded in world markets. And this past year, almost 50% of the cotton exports ended up in China.
Weather figures from across the country, especially dry conditions in the south, also caused a moderate concern for USDA's data-driven point man.
It's very premature to conclude much concerning yield prospects for 2012 crop. We still have a lot of time before plantings and before emergence, et cetera. But I think that nonetheless, weather is going to be a key concern this year, particularly in the regions highlighted on this map.
Speaking to 2,000 attendees at the USDA's annual Ag Outlook Conference, Secretary of Agriculture Tom Vilsack projected a positive future for America's farmers and ranchers.
Were he alive today, President Lincoln would marvel at what American agriculture has become. But he would also challenge us to prepare agriculture and rural America for that vast tomorrow. I can say with confidence that USDA, America's farmers and ranchers, and those Americans who call rural America their home, stand ready to accept that challenge.
But Vilsack also reached back through USDA's long history for public guidance and rural policy expertise. The USDA chief moderated a panel of former agriculture secretaries dating back to the Reagan administration, each with their own concerns about the future of agriculture. John Block, President Ronald Reagan's first USDA secretary, pinpointed biotech critics as chief obstructionists to feeding a growing global population.
That genetic engineering is criticized and challenged. There's some critics that they don't even know what they're talking about. They don't rely on science. They just try to scare people. And unfortunately, we've got a generation each year that's more further removed from the farm and they don't understand, so that they're willing to be brainwashed, as a lot of people are already in Europe. I think this is a risk. I think we've got to rely on sound science, and science will get us there. And when the Food and Drug Administration says something's all right, it's safe, it's safe.
Dan Glickman, President Bill Clinton's longtime ag secretary, addressed growing concern that public sector initiatives to feed a worldwide population could run counter to budgetary realities in Washington.
Feeding a hungry world, we're going to have to double food production, of pests, of climate challenges, of all water shortages, of lack of arable land. And you look at the world 20 and 30 and 40 years out, you wonder, do we have the capability of producing a new green revolution? Do we have the resources? Are the taxpayers willing to publicly fund these things in order that we invest in the long-term future of this business like we did in the 1960s?
Glickman's budgetary concerns were echoed across the political aisle by Republican USDA appointees Ann Veneman and Mike Johans, now a senator from Nebraska. The Obama administration released figures this past week requesting a USDA budget of $154.7 billion, a fraction of the $3.8 trillion request. During the conference this week, Johans suggested USDA's budget pales in comparison to future expenses in Washington, ranging from Medicare and Medicaid to defense and federal payments on the U.S. debt. As he announced nearly $200 million in grants from his foundation this week, philanthropist Bill Gates called on the United Nations to become more efficient in helping poor farmers and to set up a kind of accountability report card system for countries receiving aid. Gates is a proponent of high-tech and, to some critics, controversial solutions for boosting agricultural productivity, including supporting genetic modification and plant breeding as a way to fight starvation and malnutrition. Others, however, aren't so sure, and some point to glyphosate-resistant weeds as evidence of a biotech boondoggle. But just as brokers advise their clients to diversify their portfolios to minimize risk, scientists advocate multifaceted attacks when it comes to whipping weeds. David Miller explains.
For centuries, farmers have waged war on weeds. They have tried everything from pulling them out by hand, to cultivating, to spraying, to the direct application of fire. Always looking for ways to reduce weed pressure, seed companies genetically engineered products to be resistant to glyphosate herbicide, which Monsanto markets as Roundup. When approved for general use in 1994, a few scientists were concerned that overuse of the popular weed killer could lead to plants becoming resistant to the herbicide. But it appears it was only a matter of time. The first weeds resistant to the herbicide Roundup were discovered in 1996. Since then, 24 states have reported the problem, with the greatest difficulty being seen in those producing cotton. And while not as prevalent, some Midwestern farmers also are finding Roundup-resistant weeds in their corn and soybean fields.
I think of it kind of like baseball. You can't go out there and throw the same pitch every time and expect to win. Weeds are very adaptable. If you throw the same thing at them over and over, they will eventually overcome it.
Over the past 15 years, scientists have identified more than 20 plants with resistance to glyphosate herbicides, including Palmer amaranth, more commonly known as pigweed, water hemp, giant ragweed, kochia, and mare's tail. Larry Steckel, a University of Tennessee Knoxville extension weed specialist, believes the days of weed control being handled by making a few spray passes over emerging herbicide-tolerant plants are gone.
I tell our growers, a lot of the meetings, I say, you can always think back on 2003 as being the good old days when it comes to weed control, because it's never going to be that simple or easy again.
Steckel believes growers need to go back to weed control methods used prior to 2003, and he's calling for a resurgence of both hand and machine cultivation, an increase in crop rotation, the planting of cover crops, and the use of herbicides previously set aside for the advantages of glyphosate.
Now, everybody moved into the Roundup technology in the mid-90s, and that didn't happen in a vacuum. A lot of these farmers got very big. They farmed a lot more acres than they did in the 80s. And you could do that when Roundup controlled weeds at any size with one of these big sprayers, you know. Once you have to go back to these herbicides and rely almost exclusively on those that we were using back in the 80s, we just don't have as many sprayers, as much labor, and as much time as we need to get things sprayed as timely as back when we were using the same herbicides in the 80s.
Pioneer Hybrid, a national underwriter of Market to Market, and Monsanto, a biotechnology giant in its own right, are two of the top purveyors of Roundup-ready products in the United States. Representatives from both companies recommend essentially the same protocols for problem weeds. They tell farmers to be diligent when scouting fields. Be prepared to use multiple modes of action to eliminate the problem, and always apply herbicides as directed on the product's label. Additionally, Pioneer officials recommend consulting with their seed sales professionals and agronomists, as well as taking advantage of Pioneer's online library for assistance.
Preventing the spread of seeds from resistant plants is very important too. Tillage equipment and combines especially are exceptionally capable of taking weed seed from one field and spreading it in another. So that might mean harvesting a field with resistant weeds last, or possibly cleaning machinery before moving between fields.
Monsanto offers similar services and has added a monetary rebate program that encourages farmers to use a broader spectrum of chemicals to combat weeds. The incentives range from $10 per acre for soybeans to $22 per acre for cotton.
It's multiple modes of action. It's using 2 or 3 herbicides that have overlapping effects on the weeds, so that you don't get into a situation where you only have one herbicide and you're starting to select for the resistance. What we do as part of our Roundup Ready Plus platform is go to academics, go to third parties, ask them what the best recommendations are, what products would they use for these key weeds, and then we put them into our program and we make the recommendation also, and in fact incentivize growers with funds to buy those other products.
The program is unique in the marketplace and offers rebates on a myriad of chemicals made by a laundry list of manufacturers. Both Pioneer and Monsanto recommend the use of residual herbicides that are applied before planting or before the plants emerge from the soil. Depending on the crop, products containing dicamba, atrazine, and 2,4-D are being recommended to handle glyphosate-resistant weeds. Implement manufacturers also are adapting their products. Wilmer, Minnesota-based Wilmer Fabrication, for example, makes a spray hood designed to decrease herbicide drift and increase direct application to problem weeds. And waiting in the wings are the next lines of herbicide-tolerant crops with resistance to chemicals already in the farmer's weed arsenal. Despite the encouraging news, these new seeds are still a few years away from commercialization. For now, farmers will need to be diligent about watching and waiting to see if herbicide-resistant weeds creep into their fields. For Market to Market, I'm David Miller.
Next, the Market to Market report.
Despite a weakening dollar, grain prices retreated slightly this week, giving back most, if not all, of last week's gains. For the week, May wheat lost more than a nickel, while the nearby corn contract moved more than a dime lower. Soybeans, however, broke ranks with the coarse grains as the May contract rallied nearly 40 cents, while nearby meal prices advanced by more than $1 per ton. In the softs, cotton prices were under pressure this week as the May contract lost $2.50 per hundredweight. In the dairy market, nearby Class 3 milk futures lost 43 cents, while the April contract moved 54 cents lower. In livestock, April fed cattle down $1.40. Feeder cattle were off 20 cents, and the April lean hog contract retreated back below $90 with a loss of 65 cents. In the currency markets, the euro rallied more than 300 basis points against the dollar. Crude oil advanced $6.17 per barrel. COMEX gold advanced $50 per ounce. And the Goldman Sachs Commodity Index gained more than 25 points to settle at 715 even. Well, here now to let us his insight on these and other trends, one of our regular market analysts, Mark Gold. Mark, good to have you back.
Nice to be back, Mark.
A lot of things are happening out there. I want to touch on a lot of them. I want to get your impression on. But first off, you just got back from bouncing all around the state of Kansas. What's the wheat crop look like?
Well, certainly in the eastern part of the state, it looks pretty good. A little bit drier once you get west of Pratt in that area. But overall, it looks pretty good, certainly considering the drought that they had last year. Things are looking a lot better this year.
Yeah, absolutely. Nice improvement over 2011 to date.
Yes.
All right, let's talk a little about what you see as far as the grains overall, and let's kind of stick to wheat here for just a moment. Talking to producers, USDA's Outlook Conference has been underway. Their baseline numbers have really not been much of a surprise. Talk about what you see for wheat demand. Globally, I know there's plenty of it.
Plenty of wheat around globally. The Ag Forum is saying that we're going to plant more wheat here this year, and we've got bigger numbers, and I believe that's indicative of what we've seen. We've had some relatively high wheat prices, particularly Kansas, Minneapolis. Farmers have responded to that by trying to plant some more wheat. But the problem is everybody around the world's been planting more wheat. Now you've had some isolated problem areas. Certainly the cold weather in Russia has been a factor. But for the most part, we haven't seen them really pulling back on the export market. We've got a lot of competition out there. Interesting that even Iran is trying to get wheat from Pakistan this week, whether or not they get it or not in some kind of oil swap. But the fact of the matter is there's demand out there for the wheat, but we've got plenty of wheat around the world to sell. And I really believe that wheat's going to more follow the path of corn. If corn takes a much lower trend in here, the wheat's going to have a hard time responding. But if we do see the corn take a spike up, I think the wheat's going to go with it temporarily.
All right. As you look at the spreads in wheat right now, is there anything that surprises you at this point?
Not really. I think we've seen, moderate activity in the spreads. Nothing really exceptional in my opinion. But the fact of the matter is we've seen more action in the corn spreads with old crop gaining on the new crop than we have, I think, in the wheat markets.
All right, and let's talk about corn. Again, the Outlook Conference, their baseline's 94 million, which is not a big surprise. Some people think it's going to be a bigger acreage number than that. Obviously, it's a tale of two crops. It's old crop versus new crop. Let's talk about old crop first and kind of what you see happening there. What's this market trying to do?
Well, the market, we had a nice response despite the Ag Forum numbers. We closed the nearby contract corn relatively strong as the options went off the board here today. There was talk about this Chinese purchase of a little bit of corn. Now, is that the tip of the iceberg? Or, we've seen this pattern before. People say, well, it's just a one-off purchase. But if we see them come back next week for a little bit more, this may be the start of some new Chinese buying that could certainly help that market. But in the long run, what I believe not only the corn market and the soybean market is trying to do is work its way lower. And the reason I believe that is because no matter how high prices have gone in the past, and we've had some incredibly high prices just back in July of 11, I believe we're going to try to get these prices back under the cost of production. And why do I believe that? Because I believe one of the true functions of the market is to force out inefficient producers. And when I see people paying $15,000 an acre for land in Iowa, I don't know how that can last if they don't start protecting those prices farther out for 12 and 13, because the market has always gone back under the cost of production, no matter how high the spikes have been. It's always been within 18 months. Yes, we could have a drought this summer and you could put corn to $8 or $10 a bushel. It doesn't mean we're not going to go back to $4 a bushel and force out these inefficient producers. I believe that's what the market is ultimately trying to do here, to say, guys, if you're paying $15,000 an acre, let's take a second look at that.
Okay, for those guys that are paying $15,000 an acre, and you were a big seller. We talked to you last summer, and you were jumping all over these markets. For people that didn't do that, if you look at new crop corn these days, is that a place where you want to start taking some protection? What should you be doing?
Well, certainly we have our clients. We've got about 25% of the crop, estimated crop sold, what we think we'll raise. We've got puts on for the balance of that, and we're going to maintain those positions. I believe the acres are going to be huge. If you look at the crop insurance in this February time frame that we're just finishing up here, there is a strong economic incentive to plant corn over beans. If we get planting weather like we've had so far in this moderate winter, I believe if guys can get in the ground, they're going to go plant that corn. They're going to plant it until they drop. The only question is there enough seed? Yes, there's enough seed. Maybe not the exact variety that they're going to want, but they're going to get it. And if we have Mother Nature cooperates finally this spring to get that corn in the ground, I believe the acres are going to be huge.
Are soybeans in the intermediate time trying to buy acres based on the action we've seen here lately?
Well, I believe that's what the last 30 days has been about. We've seen the beans take a big jump against the corn in here. We had the corn-bean ratio under 2. We've gotten it back to about close to 2.3 now. You have new crop beans up to $13 a bushel. The beans have been fighting to try to get back some of those acres, but what do we see? With the averages in the February time period for that revenue insurance, there's still that incentive to plant corn. Now that this period is coming to an end, I don't believe there's much guys are going to be able to do to entice more bean buying. Again, if we get the weather, these guys are going for corn.
Absolutely. And of course, those who are still holding old crop corn in particular, are they kind of waiting for what we've seen the last couple of years, or as we transition to that new crop year, that's where the opportunities have really been basis-wise and on the board?
Well, we've had a real strong basis, not because there isn't grain out there, in my opinion, but because the American farmer is holding so much of it. They've built so much capacity in bin space in the last couple of years. I believe the American farmer is storing the corn. What concerns me is he's got a lot of the 11 crop in the bin. He hasn't protected 12. If we come out March 31st with a huge acreage number and we have looking at decent planting weather for the next 30 days, this market could take a hit, leaving farmers with 2 crops to market, and the real violent downturn of this could come in the time period from March 31st to July 1st. We could have a big down and then maybe a spike up if we have some summer weather. But I believe these guys are holding too much of 2 crops, and it needs to be protected and protected right now.
All right, and of course, new crop soybeans, like you say, these aren't bad prices.
These are great prices, almost $13 a bushel, old crop and new crop. Certainly get something sold up here, protect the rest of it with some put options in case we go lower. The bean market, I think, has a pretty good chance in here to stay relatively strong with the problems we're seeing in South America. But overall, it's the corn market that really concerns me in here.
Real quick, Mark, what's the corn acreage number that's going to blow this market out of the water? Is it 95 plus?
95 plus would just be too much for this market to handle, considering the glut we have of ethanol around the country and demand backing off. Now, if the Chinese come in, that can change this picture. But 95 million would be an awful lot of acres.
A lot of risk out there right now.
Absolutely.
And so we face the greatest risk when price is the highest. I've heard you say it many times. Let's talk about livestock. A totally different scenario there. There's no supply out there. Walt Hackney sat in that chair last week, and I said, Walt, what do you think about this cattle market? And he said, I've been on this show for 25 years. I've never not known. I don't know. We had a wild week cash market last week. Yeah. Another wild one this week. What's your take?
My take is that, we're bucking up $130 on the fat cattle. Incredibly high prices, $155 on the feeders. I agree that the cattle numbers are down. The cattle on feed came out this afternoon showing that the on-feed numbers were less than expected, that the total number of cattle on feed were less than expected. Marketing's up. Certainly it appears to be a friendly report. Is it going to be friendly at $130 cattle? I don't know. But the fact of the matter is that at these prices, if you've been around agriculture as long as we've been around, something always happens to the cattle market. Now, there's obviously 2 words that can break this cattle market. Can there be another situation where somebody gets on TV and says something bad about cattle? Mm-hmm. One of the things I think we have to watch is this announcement out of Europe that they're now using stem cells to make hamburger meat. Now, that's new technology, but is this maybe going to be something that people are going to look at? I mean, I don't know about you, but I don't want to walk in and look at that and, does that sound appetizing to you? Do you want yours medium or medium rare? No, I'm going to pass on the test tube hamburger. But the fact of the matter is there will be people that eat it, and if it's a viable product, whether it's 2 years or 10 years from now, we've seen how quickly technology can change and adapt. And if this technology is for real, that could be a tipping point in this cattle market if the funds decide we've had enough, it's been a great run, let's not take a chance here.
We've seen it with friendly chickens. We've seen it in so many areas in this industry. That's a good point. So good prices now, take advantage of it. Hog market, what's your take?
We've seen incredible Chinese demand in the pork industry for the last certainly 12 months. I don't believe that's going to stop anytime soon. The Chinese certainly realize that feeding their people is the key to the stability of their regimes, and they will continue to do that. And that's why we're seeing these grain prices where they are, and to some extent, certainly the meat prices. The pork, guys have asked me, you know, what do you think of the pork business? And I think that it's actually a great place to be in if you manage the risk of getting in at these higher prices in here. Long term, I believe the outlook for pork is friendly. We have to be concerned about some of the EPA concerns, but aside from that, I think pork looks pretty good.
All right, well, I got you. You take the temperature of the market better than anybody. What's your take on precious metals, and how worried are you on this crude oil situation? If anything has slowed down the economy in our lifetimes, it's been spikes in energy prices. Could we see that with the Iran-Israel situation?
That's the big key. We went up $13 in this crude oil market just since February 12th. It's all on concerns mainly of Iran and Israel. It's an explosive situation. I would say that if there is any shooting that takes place, oil will spike to, who knows, 125, 130 a barrel. I think it's going to be a short-lived spike, but I wouldn't certainly want to be short in front of that. And I think that in turn helps the gold market stay strong, as people always look to buy gold in uncertain times.
Absolutely. The panic metal. As usual, Mark, appreciate you coming by and being with us this week on Market to Market. Always some great insights, but that's going to wrap up this edition of Market to Market. Now, you can find expanded market analysis as well as streaming video of our program, all free at our website. But now we want to let you know that Market to Market may be airing in some different time slots in the days ahead due to PBS's fundraising activities. So if you value programs like Market to Market, please consider phoning in a pledge and investing in a service providing you with accurate information and timely market analysis each and every week, 52 weeks a year. And of course, be sure to join us again next week when we'll examine the outlook for agricultural prices. So until then, thanks for watching. I'm Mark Pearson. Have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content.
Funding for Market to Market is provided by Pioneer Hybrid, which supports efforts to help families pass their farms into the hands of the next generation. Pioneer, science with service, delivering success.